from TGE, and in this video, I want to discuss with you how I traded QQQ for one trade for a total of 120% return. All right. Now these screenshots that I'm going to show you, they did hit 40% on one trade, and then 120% on the other. And I didn't cap all of it at these levels because I got a trading stop loss for these, especially since they're short-term expirations. So this 120 actually I got stopped out at 90%. So that was just a stop loss, and I took that. And then this one, once it hit 40%, I set a 20% trailing stop loss. So in total, it was about 110% in total returns with QQQ. They were all day trades. And I want to discuss in this video how I use expected move to really just help me figure out support and resistance levels, right? Okay, so the first thing I want to show you is Gextron. When we take a look at Gextron, now the data is updated, so it's not the original data from the morning. These were the levels for Gextron. You can see here that we're still under this 500 level, which is very, very volatile for QQQ. And this is going to be a really key important thing, because if we're below this level, then that's why there's so much implied volatility. And I'll show you the chart here in a minute, pretty much how wild price action is due to just because we're below this level, this gamma flip point. Okay, but for QQQ, it was really, really simple. I go to this all tab right here, and it shows me all the expirations. And then I selected March because we're in the month of March, and we have the 0 DTE, that's March 12th, which is today. And earlier, I believe this move was about 6 points from when the snapshot was taken. So it was about 6 points or so. And as of right now, because the day is almost gone, there's only 4 points 4 points left in the day for QQQ to move. And so I got these levels. I added this number with the spot price that was at the time to get the expected move. And if we take a look at the chart, I'm going to move this here. If we take a look at the chart, you can see here, okay, this is pretty much how it was. This 472 was early in the morning. You see here how QQQ opened up around. This is a 5-minute time frame. So we opened up pretty high, pretty much near the expected top, actually, right? And then we sold off all the way to the bottom. Crazy sell-off, from 581 all the way down to 572. That's almost a 10-point move right there. And you just have to remember, like, these type of movements are not normal in like a normal market environment. It's because we are in high levels of volatility, and that's what allows us to capture these kind of movements and this kind of returns at such a rapid pace, right? So with that being said, the expected move was big, and the first trade I took off was a 0 DTE, which was this 120% return with this 475 call. And the trade was really simple, right? It's just like, okay, watching how price reacts at these levels that Gextron has given us here. DEM just stands for daily expected move. It's that original expected move that I caught in the morning. And it's just as easy as just like getting the spot price, subtracting the top and the bottom, and that's your expected top and bottom, right? So DEM, this is the lower DEM, this is the top DEM, daily expected move. And you see how I was holding. Now I'm looking at this not only at the 5-minute time frame, but also the 30-minute. Really, really important. And you can see here how like the 30-minute time frame tells you a different story. Strong bounce, okay, strong buying demand. And so this was really, really important to look at. You see 1, 2, 3, about 15 minutes. And so I put this marker right here. I said 473.20. If we can get above that, and if buyers start to step in, then I'm going to take my opportunity to go long. And so we went all the way pretty much around 477 to hit that 120% return. And at this drop off right here, I got stopped out with 90% trailing stop loss. Okay, so it's really important that when you're trading these like short-term expirations, that you are setting a trailing stop loss, because they're short-term. You have theta against you, and theta decay is going to eat up your 0 DTs on this drop. I don't know where price is going to go. I didn't know that it was going to go higher, right? I don't know about that. All I can do is just set these parameters to protect myself from the trade going red, okay? And so what we saw here, after I got stopped out, it hit 120% here. It went all the way down and it hit 90%, and then I got stopped out. And then I saw more buying. So like, where do I see the buyers? If you have the volume indicator, it's a great indicator. We went past this red candlestick high, right? Right here. Let me actually do a black line here. And then you see here how it shoots up in volume. Okay, this is where I took my next entry for my calls, which was this 483, but I took one DT out to give me some sort of buffer. And you can see here that price went up close to 479. At this point, what I'm aiming for really is either this 481 area, because that's where we rejected pretty hard, and also this 481, between 481 and 482, because I'm trying to aim for the daily expected move. So a lot of the strikes that I'm getting is strikes that are about 38 delta and within the daily range, so I can get that out of the money contract into the money, especially when you have these short-term expirations. Okay, and so it's really, really important to be able to pick the right strike when you're about to get in the contract, whether it's for calls or puts. And that was it, right? And then I got stopped out. At this point, I'm setting the trailing stop loss to be automated. I just raise it up a little bit. I'm using Webull, and I just say, okay, if the price of the contract is this value, then just get me out. That way, I'm not like emotionally attached to the trade. I'm like, oh well, maybe I'll do this and maybe I'll do that, right? Let the computer do the work. That way, it's more systematic, more robotic, and you could just go on with your day. And so that was a trade. This pop right here, it really started dropping down. This is what took me out to that 20% trailing stop loss on the second QQQ trade. This pop right here is unexpected. The thing you have to understand about, especially when it comes to these short-term expirations, is that we cannot predict these kind of insane moves, right? But in the back of my head, I know that these can come because if we go back to this gamma profile chart, Gextron is telling me, hey, we're still below this 500. So the selling is going to be intense and the buying is going to be intense. I just don't know when that's going to happen. Nobody knows, right? We can only like Gextron will figure out what the layout looks like and how to be prepared for it and what are the key levels, right? And so once you have those key levels in that like market environment behavior that's going to happen, then you could be better prepared, right? And so we use a lot of volume to kind of dictate like, okay, like this is the layout. Gextron has given us the layout of the room, but what's in the way? Is there a chair? Is there a sofa? Is there a kitchen top? What is it that is getting in the way from us getting from point B to point A? Or sorry, from point A to point B, right? And so if you can, and so we use the volume to let kind of help us figure those objects that are in the way. And so that's the trade. And as of right now, QQQ is falling. It might be a good opportunity to go short. I don't know. But besides that, that is how I traded the QQQ for a total of 110% return. And if you're interested in trading with me and the TGE Max members and learn how I react and behave to all of this stuff, then I will put a couple links in the description box. Apply for a TGE Max. Let's see if you're the right fit. And I will see you on the next one. Peace.